India is a country of belief and donations, and it has been an age long practice of making donation and contribution for good cause in a good faith. People of India have been donating in cash and in kind to various trusts, NGOs, charitable institutes, and temples, sometimes out of kindness and sometimes out of faith. But, friends, did you know that this contribution done for the sake of humanity can also help you in save tax? So, friends, in this video, we will discuss the provision of Section 80G of Income Tax Act 1961, with which you can get deduction for the contribution to certain funds and charitable institutions. Hello, friends, I am CA Jaideep Patel. Welcomes you all to Srihari Tax Mentors. So, let's see Section 80G of Income Tax Act, which allows deduction for the donation. So friends, in this video we will be discussing following topics. So that are what is section 80G, who can claim deduction under this section, then what is the mode of payment, then how to claim the deduction under this section, then how much deduction can be claimed under this section, then donation eligible for 100% deduction without qualifying limit, then donation eligible for 50% deduction without qualifying limit, then donation eligible for 100% deduction subject to 10% of adjusted gross total income, then donation eligible for 50% deduction subject to 10% of adjusted gross total income. And what is the adjusted total income? So let's see what is section 80G. So friends, contribution made to certain relief funds and charitable institution can be claimed as deduction under section 80G of Income Tax Act. However, all the donations are not eligible for deduction under section 80G. Only donation made to prescribed funds or institution will be qualifying as deduction. So friends, government has notified some of the funds under section 80G and some of the institution has to register under this section. And if you are making donation or contribution to them, then only you can get deduction under this section. And all those funds we will be seeing in the following slides. Then who can claim the deduction? So friends, any taxpayer, whether resident or non-resident, can claim this deduction, and it can be claimed by any type of taxpayer like individual, HUF, company, firm, or any other person. Then what are the mode of payments? So it can be in cash, check, draft, or any other electronic mode. But if you are paying it in cash, then you cannot pay more than 2000 in cash. Otherwise, it will not be allowed for deduction. And if you are making contribution in kind, then also it will not be qualifying for the deduction under this section. Then how you can claim deduction under this section? So friends, in your ITR, there is a specific table for section 80G in which you have to give some details for donation like name of donee, PAN of donee, address of donee, and amount of contribution. And by filing these details in your ITR, you can claim deduction under this section. Then you will be getting question that how much deduction can be claimed under this section. So friends, there are basically two division in this section. First one is without any limit and other one is subject to some qualifying limit. So in that, if you see deduction without any limit, you can get deduction of 100% of donation you made and deduction of 50% of donation you made. And in deduction subject to some limit, you are having 100% of deduction of donation subject to 10% of adjusted total income and 50% deduction of donation subject to 10% of adjusted total income. Then you must be wondering that what is the deduction without any limit? So friends, if you are contributing or donating to certain funds which is set up and notified by Government of India, then such contribution is eligible for 100% or 50% of deduction of such contribution from your gross total income. So friends, let's see such funds which are eligible for 100% deduction without any qualifying limit. So those funds are National Defence Funds set up by central government, Prime Minister's National Relief Fund, National Children's Fund, approved university or educational institution of national eminence, funds set up by state government for the medical relief to the poor, then Central Welfare Fund of Army or Indian Naval Benevolent Fund or the Air Force Central Welfare Fund, then Swachh Bharat Kosh, then Clean Ganga Fund, then National Fund for Control of Drugs Abuse. So friends, like this, so many funds are there for which we will be giving the list in the below description. Then let's see funds which are eligible for 50% deductions without qualifying limit. So those funds are Jawaharlal Nehru Memorial Funds, then Prime Minister's Drought Relief Fund, then Indira Gandhi Memorial Trust, and Rajiv Gandhi Foundation. Then we'll see deduction subject to limitation. So friends, if you are making contribution or donation to any other institutions which are not mentioned in above list, but they are notified or registered under section 80G, then your deduction under this section will be limited to 50% or 100% of the net qualifying amount. So friends, you will be getting question that what is the net qualifying amount? So friends, net qualifying amount means 10% of adjusted gross total income or donation or contribution made excluding the donation or contribution to the institution or fund discussed in the earlier slide, whichever is lower. That means if your 10% of adjusted gross total income is 60,000, donation or contribution made to such institution is 70,000, then you will be eligible for the deduction for 100% or 50% of rupees 60,000 under this section. So friends, let's see how to calculate adjusted gross total income. So in that, first you have to take gross total income, which we are assuming 10 lakhs, from which you have to reduce exempted income that we are assuming 1,50,000. Then you have to reduce long-term capital gain, that is 50,000. Then you have to reduce short-term capital gain, which is taxable under section 111A at the rate of 10%, which we are assuming 50,000. Then you have to reduce deduction under section 80C to 80U, that we are assuming 1,50,000. And then you have to reduce income relating to non-resident and foreign income, which we are assuming nil. So friends, you will be arriving at adjusted gross total income, which is 6 lakhs. And out of this, you have to take 10% to calculate net qualifying limit, which is 60,000. Then friends, we'll see which are the donations eligible for 100% deduction subject to qualifying limit. So friends, donations to government or any approved local authority, institution or association to be utilized for the purpose of promoting family planning, and donation by a company to the Indian Olympic Association or to any other notified association or institution established in India for the development of infrastructure for sports and games in India, or the sponsorship of sports and games in India. Then we'll see which are the donations eligible for 50% deduction subject to qualifying limit. So any other funds or any institution which satisfies the condition mentioned in section 80G clause 5, then government or any local authority to be utilized for any charitable purpose other than the purpose of promoting family planning, then any authority constituted in India for the purpose of dealing with the satisfying the need for housing accommodation or for the purpose of planning, development or improvement of city, town or villages or both. Then any corporation referred in section 10 subsection 26BB for promoting the interest of minority community, and finally for the repairs or renovation of any notified temple, mosque, gurudwara, church or any other religious places. So this was all about section 80G. And friends, to see more videos in the area of taxation, please do subscribe to our channel if you have not done so far. And please hit like button if you really like this video. And please don't forget to share it with your friends if it is helpful for them also. So friends, thank you very much for being with us till end. See you in next video.